This time around has been a robust March quarter for mass financial services. Their profits doubled in the March ended quarter, and the NBFC's asset quality has also witnessed some marginal improvement. What were the other key highlights of the quarter gone by? Let's ask the management. Joining us on the phone line is the Chairman and Managing Director, Mr. Kamlesh Gandhi. Thank you for joining us, sir. I just wanted to understand your disbursements growth, which for the fourth quarter seems a little below trend at 18% on an annual basis, especially after the kind of strong 62% disbursements growth that you all had done in the third quarter. What explains this?
See, ultimately everything revolves around the products what we disburse in and the AUM that we target to maintain. And if we see the disbursement in the third quarter is in lines with what we do usually on a year-to-year basis, and it is dependent on many factors depending upon the market situation in the last quarter and our thrust on creating the portfolio at that time. So nothing in special. It is as routine and it was as per the targets.
So what kind of disbursements growth do you expect for FY19, and that would be primarily driven by which segment?
FY19, as I communicated to various analysts yesterday also, that on a consolidated basis, we target to have around 5,200 to 5,300 crores of AUM inclusive of our housing portfolio. And across the products, 85% will come from 80 to 85% will be from MEL and SME, and the rest from our two-wheeler, commercial vehicle and housing. So that will translate into a 25% growth in AUM.
All right. Are you possibly seeing any larger competition from at least the PSU banks when it comes to the SME, MSME loans?
Not really. See, this is a very huge market to be served. One of the key enablers for our consistent performance for last 20 years is this is a very huge market to be served. There is a lot of market differentiation at the marketplace, and add to that our understanding of the segment. The key USP as far as mass is concerned is the understanding of the segment, which is reflected from the way we have the distribution network, the way we have the underwriting practices, the way we could generate the quality portfolio. So the combination of all such things enables us to grow at a very steady growth, to have a very steady growth of anywhere between 25 to 30% on a year-to-year basis.
In the past, your company has seen an AUM growth of in excess of 32% compounded growth rate. You're guiding for about 25% now. Is there scope to better this performance?
When we talk about the AUM growth, I talk about the AUM quality first. So as long as we can maintain the quality of the assets, we will go on growing between 25 to 30%. This is a range-bound growth what we always project. But we are not back to the growth numbers, and rather we are not so obsessed with it at the cost of the quality. So as long as the macros are positive, the industries where we work is the things are conducive, I see no reason why we should not grow at around 25 to 30%.
So the gross NPA ratio for your company has been steadily rising, though I do agree that it's at a manageable level of about 1.15%, so not very high. But what are the kind of gross NPA levels that you're comfortable with over a longer period?
So that is also to be seen on a range-bound basis because, as you know, that lending business is prone to so many risks. And at the same time, we are not in the business of avoiding risk, but managing risk. So the range of GNPAs will range anywhere between 1 to 1.3%, and NNPA will hover around 1%.
So then what about the marginal cost of borrowing and the NIM outlook from here on?
The net interest margin, because we see some pressures on the interest rate, so the net interest margin was around 8% last year. Will be close to 7.7 to 7.8% this year as we visualize as of now.
So what has the early experience been in the rural housing and mortgage finance business?
So as far as our housing business is concerned, if you see that we have grown at a rather slower pace of around 15-16% last year, and that was because of the many structural changes that we witnessed in the economy. Going forward, as you rightly remarked, the rural sentiments are looking strong. The income levels are stabilized over there, and especially we are more focused in Gujarat, where they have dual income, that is from animal husbandry and agriculture also. But having said that, rural is a very different market to be served. You have to be very circumspect by extending the credit. And we would, once again, I would stress that we'll focus more on the quality rather than just growing in numbers. And in that, we have a horizon of 3 to 5 years, whereby we see ourselves within next 3 years close to 1,000 crores from what we are right now. So, and what I'm telling you is reflected from our NPA numbers. We have bettered the NPA numbers as compared to the last year. This year, our rural housing NPA is 0.27% as compared to 0.36% last year, despite of the fact that it was a very challenging year. So the outlook is very positive. It's a very hard work to be done, and it will take its own time to grow the portfolio. But nevertheless, there is a huge scope out there.